For more insights on the latest updates and impacts of U.S. tariffs policy, I want to bring our guest, Jameel Ahmad, Chief Analyst at GTC, join us from Dubai. Good to have you with us, Jameel. How have the Fed's recent rate decision, which is no move on the rates, impacted the U.S. economy and financial markets amid ongoing tariff turmoil? And looking forward, what are the prospects, the likelihood for interest rate cut in June?
Well, the impact of the Fed decision has been very limited. That's because we actually expected no change. In fact, what was more concerning headed into the decision was actually the way that President Trump a couple of weeks ago seemingly attacked the Federal Reserve Chair Jerome Powell in his position for not moving interest rates. So I think that was more of a concern rather than the Fed positions themselves. When it comes to what we think might happen with the Fed over the coming months, they seem to have suggested they're in somewhat of a catch-22. They do see slower U.S. economic growth because of these tariffs, like many leading institutions have already suggested as well, including the IMF that gave the United States the largest downgrade of advanced nations based on tariff policy alone. At the same time, they also suggest to the Fed that the inflation risks are a little bit tilted to the upside, which might tilt the Fed's hand that even if the U.S. economy slows down, they might not actually be able to cut interest rates or to the extent that the economy might need because of inflation concerns. Yet, what is a bit more promising, if we look at what's happening with the US and the UK over the past 24 hours, it does seem to be that we're getting towards a little bit of light at the end of the tunnel when it comes to this very erratic policy uncertainty with trade. And it does appear that the US administration are working very hard behind the scenes to get trade deals done, no matter how much erratic noise there might be in headlines.
Yeah, a lot happening and quite a dilemma for the Fed. A week ago, when you and I talked, you mentioned gold as one of the few viable options for investors. At that time, I remember gold was lingering around 3,100, and now gold prices subsequently peaked at $3,700 per ounce. How should investors now consider adjusting their portfolios?
That's very much true. We called it on this show just a couple of weeks ago, me and you, when we talked about 3,400 being possible should the tariff uncertainty continue, and it definitely did continue. In terms of what happens next, I actually see gold as very much overvalued, not because it's not a good asset for diversifying your portfolio, but because we're in very much uncharted territory. Historically, we've never seen gold prices this high. It's up more than 20% this year based on this uncertainty along with tariffs. They had a fantastic 2024. Nonetheless, 3,500, I do think, was the ceiling unless we have another very unexpected market event. Now that we're starting to see some aspects of trade deals being underway, we know negotiations are taking place. It wouldn't surprise me if investors now starting to take some profit off gold. And I'd also point out that the US dollar looks extremely oversold. And should investors start going back towards the greenback on some of these concerns for the US economy not being exactly what's been priced in, then that also can suggest that gold prices will see some profit taken.
Right. Now, the key question, the recent tariff deal between the US and UK has positively influenced the market. Yet the first China-US negotiation set forward this weekend in Switzerland is catching the observation, the eyes of global investors such as you, right? So what are the market's expectations for this first round of negotiations?
Let's put it this way. We've seen the market rally on the US and UK trade deal. And the UK was not one of those economies that was under the fire of the US administration. So we can take that with a pinch of salt, but then say that should we get some positive narratives from the upcoming negotiations, then this market has a long way to go for a potential rally. Because this is world number one and world number two economy. It impacts everybody across the globe economically too. So should we see that, although obviously there are tensions, we cannot dispute that, but should we see that there's at least some agreement that we need to try to make some sort of deal or give some positive headlines, then investors will jump on that news.
Okay, we'll closely watch on that. So I'll definitely ask you to come back to our show to discuss more on the developments. Jameel, for us.